So hi everyone, welcome to the Club Soda Drink Members webinar. This is our second one. We had a really good one last month on how to use data and research for your marketing and so forth. And today we have Greg Ludvigsson from Claimer talk about R&D tax credits and how to claim them. And then in 2 weeks time, we've got something on Dry January, how to make that a success for you. And I'm just going to do a quick intro, and then I'll let Greg take over and talk about the details. And I'm sure you're happy to take questions throughout, Greg. And then we'll have time at the end for more Q&As. And so R&D tax credit, it sounds like a forbidding topic. And back in the early days of Club Soda, we spent quite a lot of time and money on building our websites and various other things. And someone told us that, oh, you should think about getting R&D tax credits. It's a good way of getting a bit more cash into your startup. And I had a look on the HMRC website and I read through the guidance, and he said stuff like, you have to do internationally renowned scientific research to qualify for this. And I thought, no, that's not for us. That's not what we did. But then people kept telling me that, no, really, you should look into it. And we put a claim a few years ago and got some money. And turns out that it's not as difficult as HMRC make it sound. And then in just the last few weeks, Claimer have helped us to do our latest claim, which is about to be submitted to HMRC. And I really have to say I enjoyed the process. It was very slick and easy compared to the first time I did the thing myself. It was not easy and it was really scary. And I believe Claimer's fees are also really, really competitive, because I mean, some accountants will take a good chunk of your claim to themselves, but I think Claimer is a very attractive proposition. And we also have a sort of a referral scheme with them. So if you go through us, you get another 5% of the Claimer's fee. So let's all get cracking with claiming tax credits. So without further ado, Greg's from Claimer, and he's going to tell us a bit more about the topic. So take it away.
Fantastic. Jesse, first of all, let me just say thank you for setting this up and inviting me to do this. I'm always happy to be involved with communities, especially as this kind of introductory to R&D tax claims. The presentation itself is only about 10 slides. It shouldn't take more than half an hour, but with questions and everything, hopefully I'll be able to answer anything that you have. And I'll try to make this whole thing pretty quick and painless for you. I will say, Jesse, though, that you were wrong. The discount that we gave you is actually 10%, so even cheaper than we originally thought. Good on you. So yeah, this presentation itself is just talking about the tax scheme, typically what it is and who and what qualifies for it. Because exactly as Jesse described, a lot of people, especially SMEs, will encounter a few hurdles to the whole situation. Typically, if they hear about the R&D tax scheme, startups will think, well, that doesn't apply for me, exactly like Jesse, and think that I'm not in a lab coat, I don't work in a lab, so not me, doesn't matter, and they'll just kind of ignore it. Let me tell you right off the bat, not true. It is meant by design to apply to as many companies as needed in as many industries as needed. It has a huge potential for claiming. And so hopefully after this, the stress and headache and overwhelming aspects of it will be pretty completed. It's also possible that you could go to your accountant, let's say, and well, first off, they might not know what qualifies, so they might give you some bad advice and say that you're not eligible when in fact you definitely are. And almost certainly they will not be able to maximize your claim. And it's not really their fault, but typically they won't know what qualifies. And so they'll just kind of approach it at a very high level without getting into the nitty gritty. More often, they will just say, we don't do this, we don't touch it, you should just go talk to a specialist. And if you're a startup and they go to a specialist, chances are they'll very quickly determine that you are doing some level of R&D, but it will be at a level that isn't profitable for them, because they will only work with claims that, let's say, have 30,000 pounds or more in their actual claim. So they'll send out a contract and they'll lock you into working with them for 3 to 5 years. It'll take weeks, if not months, of back and forth conversations, probably with 3 or 4 people. They'll send you Excel documents and Google documents and just ask you to give them all kinds of information, and still take 25 to 35% of the claim at the whole end of the affair. And it's just a big hassle. So the one pitch that I will give at the very beginning is that Claimer is a tech company in the R&D tax credit space. We have no minimum claim value fee. We have no minimum contracts, no contracts at all, really. We are catering to startups and small companies. We have 0 reductions, 0 rejections, 0 inquiries from HMRC. We have a 100% success rate. We are equipped with tax experts and tech experts. So all of your claims will be reviewed by our people. We do submit it to HMRC. We offer a lifetime guarantee of claim defense. And for all of this, we charge 5% of the fee, plus an initial 10% off from Jesse's referral scheme. So this is just the basics of Claimer. That's the spiel before we get into the actual R&D tax scheme. But let's just dive in. The tax scheme itself got started about 20 years ago. It is based on the Canadian R&D tax scheme because HMRC realized that for every pound they put into investment with R&D, they get about 2.3 pounds back into the economy. So it's good for your company and it's good for the country. The amount of new companies that the UK has every year is about 700,000. And only about 48,000 claims are made per annum, about 42,000 of which are the SME scheme, which is about 90%. The remaining 10% fall into the RDEC scheme, which is the large company scheme, essentially. A good way to think of it is the small company and the large company scheme. Of those 90% of claims, the average claim size is about £50,000. However, about 60% of those SME claims are £30,000 or below. About 20% of those SME claims are £5,000 or below. So this data right off the bat tells us, number one, nowhere near enough companies are applying for the R&D tax scheme, probably because of those hurdles I mentioned earlier, and definitely the people that are applying for it are not maximizing their claim. So that's why specialists exist, and that's how we can help you. And I will say that HMRC wants to increase their spending with R&D investment. They're spending about 1.7% of GDP, and they want to get it up to, I think it's 2.3% by 2027. So they know it's good for the country. They want to increase their spending. They want more people to apply for it. It's just a matter of people figuring out whether or not they qualify for it and being able to maximize their claim. The basics of who can qualify for the tax scheme, essentially pretty simple. First off, are you a limited company within the UK? That's pretty obvious, right? You have to be subject to UK corporate taxes if you're going to be taking advantage of a UK corporate tax scheme. Now, as this presentation is tailored for the SME, and because the vast majority of them follow into the SME scheme, we did give the requirement of having less than 500 staff and either 100 million euros in turnover or 86 million in assets. So right off the bat, if you have less than 500 staff, you're going to qualify for the SME scheme. The major differences between these two schemes, by the way, is really just the percentage of expenditure that you get back. And I'll touch on that a little bit later. But it is important to realize that this is worldwide R&D. So let's say if you are incorporated in the UK, but you have contractors outside of the UK, then you can still add in those costs. Or if you have, let's say, a parent company in the US, but the R&D expenditure is still coming from the UK company and not being reimbursed by the parent company, then it's still the UK company that gets to apply for the tax scheme. Now, if the parent company in the US is footing the bill and the costs just get channeled upwards, then it's actually going to be the US company that is going to be eligible for the tax scheme in the US. And if they have over 500 employees as their parent company, then you are going to be forced into the RDEC scheme. if that makes sense. So also for the SME scheme, one of the ways that you can be forced into the RDEC scheme is if you accept registered state aid. So this is grants, also things like the Coronavirus Business Interruption Loan, the CBIL. And this isn't necessarily the case, but we will need to look at your contract because it might be a hybrid solution where let's say for Innovate UK, typically the projects that qualify for the grants that you win from Innovate UK will have very specific requirements. And so it'll be just that project and the costs associated with that will qualify for the RDEC scheme. And the rest of your projects and the rest of your time for R&D expenditure will still qualify for the SME scheme. So it gets a little complicated. And right off the bat, you can see how a non-specialist will maybe not maximize or really understand what can be added into the claim. Generally, this is one of the ways that they will underreport your claim because there are 4 umbrella areas that can be qualified for the R&D scheme. One is the salaries. This is actual pay-as-you-earn employees. This is the salaries, the national insurance contributions, the pensions. So any way that you are actually employing and are doing R&D related activities that can be added into the claim. Also contractors. This is people, again, doing the actual tech or scientific work, not so much the UI or the market research or things like that. It is specifically the R&D related activities. Also some smaller areas like software. This could be developers' tools most commonly, but it is also things like potentially communication tools, like Slack, for instance. If you are talking to your team or your contractors, it's really anything that without which would be more difficult to complete the R&D. Also with consumables, this is utilities, light, heat, power, but also anything used in the building of prototypes, for instance. Anything consumed or lost in the process can be added to the costs. Most commonly, if you have an accountant or if you're doing this yourself, it'll just kind of be these 4 big areas and you'll have a checklist and you'll kind of just work your way through it. And they'll ask you to fill all this information out yourself. And it'll just be kind of a really rough estimate and probably too conservative. So if you're going to make a claim, I definitely recommend that you use a specialist. And if it's not Claimer, hopefully they'll have some kind of tech person who can understand what you're working on and won't ask you to just kind of do the whole report by yourself, and then they'll submit it to HMRC with no interaction with you specifically. Now, with startups for the SME scheme, they usually will pay a contractor or a freelancer, someone who's not a pay-as-you-earn employee, to do the actual R&D work for them. So there is some confusion sometimes about who gets to qualify for the tax scheme. And they'll think, well, I am paying this person for their software, so it's their IP and they're the ones doing the work. They're the ones that should be making a claim. And right, again, let me just say, incorrect. It's the person that owns the IP is not the person necessarily that's assuming the risk of the work. And that's what matters. So for instance, if you are licensing some software from people, and let's say it is just a general platform, but you ask them to build some bespoke items and you're paying them to do that work for you, then essentially they've become your contractor and they're building things that are theirs technically with the intellectual property rights, but it is work that you require them to do for you. And if something goes wrong, or if the project lasts longer than it was originally planned, if you're the one footing the bill, you're the one that is assuming the risk of the project. I don't know, Jesse, do you want to stop for questions? I feel like I've just covered a lot of information. I'm happy for you just to collect all of this at the end and we can address it later.
Yeah, there was one question actually from someone about a very early stage company where the director isn't paying themselves yet.
Yeah.
But they've spent a lot of time on R&D,
yeah,
but aren't getting paid either a salary or dividend. Is there anything they can claim for that time?
So if it is equity or dividends, those don't count. So it has to be wages, it has to be national insurance contributions, and it has to be pensions. Those are the three areas with salaries. There was one case that we worked with pretty recently where there is a director, I think I mentioned this, but there's a director for the company, but they're not paying the director directly. They're paying a holding company who's then paying the director. So technically they are a contractor at that point. So specifically, it does have to be wages, national insurance contributions, and pensions.
Pensions, yeah.
Yeah.
Gotcha. Yeah, I mean, happy to take questions from people. If anyone's got anything, you can just shout out. But if not, you can just carry on.
Okay, really cool. So just to get into the projects themselves that qualify and the actual work done and what qualifies for the R&D tax scheme according to HMRC is encountering a technological or scientific uncertainty, approaching it in a systematic way and having it lead to an advancement or increase in knowledge within that scientific or technological field. So this can apply very obviously to software development, but as mentioned earlier, it can apply to all kinds of companies. Some of the weird ones that I've seen are scaffolding, like I mentioned earlier, but also things like blankets for lambs, kelp farming, ferret food, obviously drinks, sex toys. It's a huge breadth of possibilities that you really just have to encounter some level of uncertainties with science or tech and then work to overcome those uncertainties. So if you, for instance, are trying to get a correct flavor profile or a pH balance and you are failing at that, that's a great sign because it's something that you don't immediately know how to do. So it's not instantly easy to solve. Another great starting point, a green flag, as it were, if you have to hire professionals. So any like a chemist or a PhD person or an engineer, anybody that is a competent professional in their field. Now, and it does have to be a competent professional because, for instance, if you hired me to launch a satellite for you, I would not know how to do that. So 100% of my time might be R&D, but it's not going to lead to any kind of scientific or technological increase in knowledge, right? Because I'm just trying to catch up to everything else. So it does have to be field-based. Now, this does not mean that just because other types of tea or vitamins exist in the world that you would not count. It does mean that if you copy and paste some type of software code, for instance, or have an off-the-shelf solution, then that would not qualify. So specifically encountering those technological uncertainties, working to overcome them, and it doesn't have to be a unique product. It just has to be maybe a unique process or a unique way of going about it according to you and your company, right?
Which is, I think, interesting for us in this aspect, because the low and no alcohol drinks are still a fairly new thing. And I'm sure everyone on the call will have sort of stories of trying to get something done and failing and trying again. And sort of, I think one word you use somewhere is the sort of iterative process. So you try to do something and you do it again and again and learn every time and finally get to the end result. And that's a good sign that you have done something that's in scope for this kind of thing.
Yeah, exactly. Essentially anything that you fail at, anything that you can't just solve in 10 minutes or that you, with a competent professional, will just instantly know how to do is a good chance of qualifying for R&D. And specifically the types of projects and specifically the actions that do qualify for the tax scheme are those iterations. It is the development and the work done to solve the issues that you're encountering. So the research done, for instance, whether it's market research or reading the textbook to fully understand exactly what you're working on, that would not be a type of activity that qualifies. So out of the research and development, it's really the development that qualifies for the direct R&D cost. Now, once you do get to that completed product, if it gets to the mass production stage, or if it's just maintenance or bug fixing and general upkeep, that is no longer encountering uncertainties. So it would not count for the R&D tax scheme. gets a little bit in depth around this part and exactly the work that you're doing that qualifies for the tax scheme. So don't worry, it is still ways that you can maximize the expenditure because there are other indirect costs for the R&D tax scheme. This can be pretty varied. In fact, it could be, let's say, personnel costs. If you have an HR person who is spending a certain amount of time looking for that professional and hiring them, without whom it would be difficult or impossible to do the R&D, potentially their percentage of salary that works for that hiring of the employee could be added to the claim. If you have to work with the contractor, for instance, to talk about goals, and this is kind of seen as an administration activity where you're outlining what you need that product to be doing. Even if you're not the person that's encountering the technological uncertainty, you can still qualify for indirect R&D and be added to the claim. So there are ways. It's not just something that, okay, it's just the developer or it's just the chemist, it's just the scientific or the technical lead that will qualify their time for R&D. There are ways to maximize this claim outside of that. What does this all mean for you as an SME? If you qualify for the SME scheme, if you are a profit-making company, you get about a quarter of your total expenditure back. If you are in a loss-making position, this is even better because you get about a third of it back. So which of these schemes you qualify for depends on some certain aspects. Like mentioned, if you receive state aid, if you have a certain level of employees to get into the RDEC scheme, it can force you out of the SME scheme. But typically, this is what you need to know about how much of your expenditure that you get back. Pretty standard. The qualifications and the breakdown of everything about how we arrive at your total claim size with Claimer. You will be able to see a breakdown of that in our software, but obviously a good general estimate is to figure out how much you're spending and then to divide by 1/4 or multiply by 1/4 and multiply by 0.33. If you have been doing R&D in the last couple of years and you haven't filed the claim, do not worry. It does not have to be complete with your accounts. And in fact, you have 2 fiscal years in order to file a claim. So let's say you were working on this R&D, you incorporated in October of 2017. That March 2018 is a little off, but whatever. If you incorporated in October of 2017 and your end of year was October of 2018, then you have until October 2020 to file the claim. This is HMRC's rules because it is submitted as an amendment to the tax return. So as long as your accounts are complete, you will be able to file an amendment for the next 2 fiscal years. If you have a year-end September 2018, then you just lost out. If you are working on your current accounting period and you, let's say, incorporated in October or even December 2019, you have until December 2022 in order to file a claim because your year end will be December 2020 for that first accounting period. This doesn't mean that you can't get started on the claim. It doesn't mean that you can't go to Claimer and create an account and see what we ask for. And typically what I suggest is for people to be pretty proactive about it and to kind of fill out this information as you go and to keep track of how much time people are spending on the claim, are on the actual R&D projects, to keep track of who's doing what and how many projects you have and all of that good stuff. So when it does come time to file a claim, you have all that information at your fingertips, and it can really just take 20 to 30 minutes and be a really quick process. If you don't do that, don't worry about it. Almost no one does. I realize that's a big ask because nobody really thinks about taxes until they have to. So it doesn't matter. It just makes our life a little bit easier, maybe yours, but we'll still work with you very closely as much as you want us to, hold your hand through the whole process and make sure that your claim is optimized to the legal allowable limit. So that's the pretty much long and short of it about what qualifies, types of activities, the types of projects, some background about the claim. I realize I do have a tendency to talk very quickly. So if there's anything you want me to go over, I'm happy to. If you have any questions, anything that you want me to go more in depth on, I'm happy to. just let me or Jesse know.
Thanks, Greg. That was really good introduction to the topic, and I think I learned a thing or two myself. That was always good. So yeah, if anyone's got any questions, feel free to unmute yourself and ask away. And I think we, before the actual meeting started, we discussed that you have actually dealt with some food and drink companies already, Greg.
Yeah.
So it's not completely new to you.
Yeah, no, definitely. If you have, I mentioned this before the thing started, but if you are trying to achieve a certain flavor profile or a certain scent profile, a certain amount of dietary restrictions or vitamin profile, just to give the right kind of sustenance to the drink, then absolutely fine. It doesn't disqualify you. In fact, it's a really good sign that you are doing some level of R&D. So we're pretty familiar with it at this point. While we don't have chemists on hand, it wouldn't be able to really make a difference. I mean, the important thing is that you have people who understand the tax scheme and are able to ask the right questions in order to maximize the scheme for you. So compared to another specialist out there, for instance, who might have a chemist, there won't be much difference between claimers' ability to maximize your claim and theirs. It'll probably get about the exact same based on, the experience with the tax scheme itself. But compared to a regular accountant or compared to a person or a company filling out the claim themselves, the specialist will be able to increase it from 30 to 50%. And in terms of our comparison to other specialists, where we really come in hand is the efficiency, because we take about 10 times less amount of time dedicated to the creation of the claim. Ours can take about 20 to 30 minutes to fill out. And in terms of cost, we're about 5 to 7 times less expensive than any other specialist out there. So if I would recommend definitely that you use a specialist, and if you're going to use a specialist, obviously I'd recommend Claimer, but it doesn't mean you have to.
Yeah, if you look at the fees people claim or take, then I think, yeah, it's fairly obvious that you are one of the, if not the cheapest option.
Yeah.
And
what were your fees again, Greg? It's Jeff from Sea Arch.
Yeah, it's 5% of the claim. We work on a percentage-based contingency, which means we don't get paid until you get paid. However, we do have a minimum fee of £250. So even if your claim was something like £1,000, which is very difficult to get that low, honestly, it was still going to take £250. We also cap our fees at £10,000. So if you had a £10 million claim down the line, we're still only going to take £10,000. So it's going to fall within that range.
Sure. Okay. I'll email you later on just with a few details and just see whether we qualify.
Yeah. Anyone obviously that has any specific questions about their company, feel free to contact me directly. Even if you don't use Jesse's referral link, if we know that you come from Jesse or come from this meeting, then obviously we can apply that on the back end, no problem, to give you that further 10% discount. Or if you just want to ask me any specific questions or get really into the nitty-gritty of the work that you're doing, we can definitely set up a future call and talk about it a little bit more thoroughly.
Hi, Greg. This is James here.
Hey, James.
Hi. Sorry, I sent a message to Jesse, but I had to mute your presentation while I took a call. So I'm not sure if he's asked you this, but I'm familiar with the R&D tax credits, etc. I've got another business that benefits from it. And to be honest with you, I wish I'd known about Claimer beforehand, because your fees are quite a bit different to what I'm paying elsewhere. Yeah. So I'm aware of the hardware and contractor, etc. that can actually claim for. But the question that I have is that I'm the only person, well, not even an employee, but the only person in the business itself. And I spent a lot of my time and what have you developing products and what have you. But I'm not drawing a salary, I'm not taking dividends, so there's no outgoings that are coming out of the business to offset or to put forward as part of a claim. Is there any way that can be done, or can that be done retrospectively in subsequent years when I'm able to draw a salary?
Actually, yes, because if you do have expenditure that isn't salaries, which is wages, national insurance contributions, and pensions, again, if you in a later accounting period charge the company for your time and the work done, you can still add that to the claim. So, for instance, we recently worked with a company, or currently working with a company that got started. It was just like a team of 3 engineers, but the company was incorporated like in October, and they've been working on it since January. So their year end was like October to October, and then their next accounting period is when they started paying themselves things. But they did most of their R&D work when the company wasn't actually paying them anything. So they can still submit a bill and be invoice the company directly for the work done in a previous accounting period. And then that will be able to add to that claim for that accounting period.
Right. So that would be an invoice coming to the business as opposed to salaries or dividends. So
yeah.
Yeah.
I mean, yeah, you have to actually be charged to the company as the kind of invoice. It's still your time, but it would essentially be qualified, not necessarily under salaries.
Right. Okay. That's interesting. Thank you.
Yeah, there's some details with the rules, and you might even have to file an amendment for the previous accounting period to be, for if you already completed your accounts for it, and it's not an applicable amount. For instance, if it's too small, then it could be filed in the next accounting period as an unchanged previous amendment. So that's pretty in detail. I don't really know why I brought it up, just that there's some ways that we can get around it.
Okay. No, that'd be interesting to maybe pick up with you after the after this, and yeah, see what can be done. So I'm just about to file my first set of accounts. So it's just about to go in. So it was perfect timing, obviously, that this presentation came up today. Yeah, no, that's great. We'll pick up afterwards. Thank you.
Yeah, happy to. And yeah, like I mentioned, that you do have 2 fiscal years to make a claim. So if you have completed your accounts for the last couple of years, then now's a great time to get started on it if you haven't filed before. And if you have used a specialist before, that's a-okay. We'll ask you probably for a copy of the claim that they did, just so we can see kind of what they had an idea of. And it helps, I think, just to kind of see what they would qualify for and to see how we would be different, and just kind of see how much more we could save you.
No, that'd be good. I mean, on this particular business, I'm not working with anybody to help on claims, so it'd be good to sort of work with you and see what can be done. Yes. Thank you.
Any other questions from anyone about anything?
Hi, Greg. Can you hear me?
Andrew.
Yeah.
Yeah, sorry. Just follow on from that question. I have a personal company that pays me, but I'm working full time for the drinks company. How does that work in regards to the R&D?
Is the company that you're working for charging the company that pays? All right. So you have a company that pays you, and they're charging the drinks company that you work for.
Well, at the moment, because obviously both my companies, they kind of like intertwine. So it's salary comes from the personal company, and the drinks business. Well, much like the last speaker, I'm not drawing any income from it because it's still starting up. But the other company, which does pay me, I'm not working for that company. I'm working for the drinks company.
Okay. So the way that you can incorporate the drinks company for R&D related activities that you're doing for the drinks company, if the company that you own is paying you and the company that you own invoices the drinks company, you could be classified as a contractor.
Right.
So the way to maximize that as a contractor is if you get labeled as what is a connected contractor. So these are contractors that are more than the 65%. This is essentially just filling out a page to say, hey, with this specific project or this specific company, it is more than 65% of our time working on R&D. And it's just a simple page to send to HMRC to be classified as a connected contractor. I think we have a template that is basic information. It's real simple. It's really for family or exactly people in your situation where it is technically legally a contractor, but you work so closely with a company or you're connected with them in some other way that it's not a problem for you to fill out that one pager.
Fantastic.
But yeah, it's still the company. The expenditure does have to come from the drinks company.
Yeah.
So yeah, okay.
Yeah, I'll email you this evening as well.
Great.
Great. So unless anyone's got anything to add, we can probably end it there. And I'll email everyone with Greg's contact details as well.
Sure.
And yeah,
Jesse, I think I'll send you, just to make sure you have it, the slides I just used and the referral link. And so if anybody wants to sign up, the discount from your referral will be automatically applied if they use that link. And then you can just kind of go through it. If you want to contact me afterwards, and I can send you like a verified link and add the discount on the back end, that's totally fine too. And if you have any other questions, just let me know.
Great. Thanks a lot, Greg. That was really good. And thanks everyone else, and hopefully see you in 2 weeks' time.
Thank you again, everyone,
Yes.
for joining.
Bye.
And Jesse for setting this up.